Hey guys, welcome back. Now, crypto burst onto the scene about 10 years ago, and it's caused a bit of a divide. Now, one group of people love crypto, they think it's the next generation of internet, and they see huge growth potential. And the other side don't like crypto, they say it's no different to gambling, they don't see the value, and probably want it to fail. Now, freedom of speech gives us all the opportunity to have an opinion on crypto. However, what do the very best investors in the world think about crypto? And that is the topic of this video. Now, we're going to be hearing the latest thoughts from 4 of the very best: Elon Musk, Warren Buffett, Ray Dalio, and Paul Tudor Jones. Each one is a multi-billionaire and a legend in their own right. And these clips are all the latest thoughts, and we'll go through and summarize the key points for each. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, first up, we have Paul Tudor Jones. With a net worth of around $7 billion, he was well known for being able to predict the Great Crash in 1987, also known as Black Monday. And here is what he said just last week.
Here's what I see. I see this generational divide, and it's a digital divide. And unfortunately, Joe, you and I are probably on the other side of it, though I think we're both scrambling as fast as we can to understand it. If you look, and I see it all the time in our quant groups, I see it all the time in my kids' friends. If you look at the smartest and brightest minds that are coming out of colleges today, so many of them are going into crypto. So many of them are going into the Internet 3.0. It's hard not to want to be long crypto because of the intellectual capital, just the sheer amount of intellectual capital that's going into that space. And clearly, if you think about the ultimate dream of crypto, it's a borderless internet, right? Where all of a sudden you have blockchain as the verification code to allow anyone on the internet to instantly connect because the blockchain verifies who they are. And then that opens up just huge possibilities. Clearly, central banks and central governments are not going to necessarily be huge fans of that, particularly when it comes to using crypto as a medium of exchange. That's the number one thing that's holding it back, is the fact that you're not going to get buy-ins from governments because they lose the ability to control the creation and the supply of money. Having said that, in a world where we're starting to deglobalize and breaking down, and actually probably going reverse, that ability to have the borderless internet, that ability to have a store of value outside of necessarily having your money denominated, whether it's in rubles or yuan or dollars, it becomes very attractive. So I've got my modest allocation to crypto. I have a trading position on top of that that goes from fully invested to zero. And I'd say right now I'm modestly invested, and I would think that it's going to have a bright future as we roll through these rate hikes at some point in time. A lot of it depends on what our central bank does.
So he makes a very interesting distinction and says that crypto seems to have a generational divide, and the younger generation seem to have more of a natural adoption, yet the older generation seem a bit more reluctant to change. Now, I think the year 2000 was a huge milestone in human evolution as we entered a new age. We went from the industrial age into the digital age, and now everything is going digital whether we like it or not. And he points out that crypto is sucking up all the best talent. As he says, the sheer amount of intellectual capital are all flooding into crypto. And he says that it's really hard not to be long crypto. Now, we do know that Paul started out with a 1% allocation, and it's now at least a 5% allocation. And remember, for billionaires, that's quite a lot of money. So clearly, he is a fan. Okay, next up, we have Ray Dalio, the man who advises central banks when it comes to money. And Ray has a net worth of around $22 billion, and he is the king of the hedge funds, having built the largest in the world.
Well, I'm not going to give the precise amount of Bitcoin, and that I do own some Ethereum as well. But the answer to your question is that I don't own a lot of it. I view it as an alternative money in an environment where the value of cash, money, is depreciating in real terms. And I think it's very impressive that for last 10, 11 years, that programming has still held up. It hasn't been hacked and so on, and it has an adoption rate. So I'm very big on diversification, and it's a relatively small part of the portfolio. I would like to say that cash, I've been quoted, cash is trash. Cash, which most investors think is the safest investment, is, I think, the worst investment, and that it's important because it loses buying power. The one thing I would say to investors is don't judge anything in your returns or your assets in nominal terms, in terms of how many dollars you have. View it in terms of inflation-adjusted dollars.
So, one of Ray Dalio's key investing principles is diversification. He believes that you don't want all your eggs in just one basket, and it's much better to have several uncorrelated bets. Now, we know that he's invested in Bitcoin and Ethereum, but he doesn't want to say how much. And we also know that the one thing that he really doesn't like holding is cash. Now, on this, I would add, yes, I get the benefits of diversification. Now, especially when you've got millions or billions of dollars, but it's very hard to grow small sums of money when you're spreading it out into several places. So I guess it comes down to risk and return. Okay, next up, we have the Oracle of Omaha, Warren Buffett, arguably the world's greatest investor, and with a net worth of around $155 billion. Now, interestingly, he also happened to invest in the bank that launched the first Bitcoin ETF in Latin America. Coincidence? Anyway, here is what he said just last week.
Shouldn't answer any questions on the subject, but I will. There's all kinds of people watching this that are long Bitcoin, and there's nobody that's short, and nobody wants their windpipe stepped on. I don't blame them. I don't like people who step on my windpipe. But I would say this: if the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, and you said, for a 1% interest in all the farmland in the United States, pay us this bargain price, $25 billion. I'll write you a check this afternoon. $25 billion, now I own 1% of the farmland. If you tell me you own 1% of the apartment houses in the United States, and you offer a 1% interest, so I'll have a 1% interest in all the apartment houses in the country, and you want another $25 billion or something, I'll write you a check. It's very simple. Now, if you told me you owned all of the Bitcoin in the world, and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was 15 years ago. If I've got it all, he could create a mystery about it. But everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well, why should I buy some Bitcoin from you? I mean, why don't you call it Buffett coin? Make your own or something. What? Do something. But I'm not going to give you anything for it. And you'd be right, incidentally. But that explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got.
So, Warren Buffett, not a fan of Bitcoin. And I think his main point is that he likes to invest in producing assets, like stocks, like farmland, or apartment buildings, which I think we'd all agree are very good investments. And he really doesn't like to invest in assets that don't produce anything, which is also why he's never been a fan of gold either. Now, not that I have the credentials to correct Warren Buffett, but I would just add that Bitcoin does have utility, unlike gold. Now, with Bitcoin, you can send $1 billion across the world at almost zero cost without any middlemen, and it doesn't take up to 14 days to clear. And with recent developments in Bitcoin's Lightning Network, it can now also be used as a payment channel. Again, at almost zero cost without middlemen, and it settles instantly. And by owning some Bitcoin, you get to own a piece of this digital payment network. So unlike gold, it does have utility. Paul Tudor Jones is clearly a fan of crypto and has taken a position. Ray Dalio is clearly sees the benefits of crypto and has also taken a position. But I don't think Warren Buffett will be buying into crypto anytime soon. Now, we can't finish the video without the opinion of world's richest man, Elon Musk, with a net worth of an eye-watering $253 billion. That's coming up to almost double Warren Buffett. Now, unfortunately, I don't have a recent clip. However, he did make a reference to crypto in the latest SEC filing that's just happened. He said he does believe in the potential of digital assets, saying, "We believe in the long-term potential of digital assets, both as an investment and also as a liquid alternative to cash." And we do know that Elon has made a significant investment into Bitcoin, so clearly he's also a fan. So there you are, guys. Hope you enjoyed. I would say that it's clear the majority are fans of crypto and digital assets, but let me know your thoughts below. But for now, just to say, if you did enjoy anything in the video, then drop a like. Always appreciated. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.